If you thought the situation with debt is bad, I'm going to show you why it's about to get a lot worse. Look, you've got people that are in debt up to their gills, and there's no possible way that they can ever pay it back. But what happens when you add on top of that very high interest rates that stay for a prolonged period of time? Well, this is becoming an issue not just in the United States, but basically everywhere. I'm going to give you the impact that it has on you today. Welcome, truth seekers. You've landed in the right place. I want to bring you the information that others simply can't. They won't. So join this grassroots movement of nearly 300,000 people. Hit that subscribe and the notification down below so that we can go on this journey together. Speaking of which, I want to show you what's happening with debt. It is very important that we watch this very closely and the developments. And I wanted to start with student debt. Here we have it. Student loan pause is ending with consequences for the economy. 3 years of relief from payments on $1.6 trillion in student debt allow for other borrowing and spending, and that will shift into reverse. You got to know this. You have to realize what's happening here. The people didn't have to pay back their debt. And for a lot of these people, I actually don't think that they want to pay this back. And some are not going to. They're saying, why? The administration, this government, is going to pay that off for me, or at least a percentage. So I'm just going to sit back, cross my arms. I'm going to delay it. I'm going to default if I can. There are loopholes, and I'm going to use them. So that means that the taxpayer will ultimately foot the bill for this. At least that's what they think. Is it the same then for credit cards? You know what? I'm just going to take on as much credit card debt as possible. Let somebody else pay it off. What people don't realize is if you have an interest rate attached to that, you're going to be really hurting real bad very quickly. It's not as if, oh yeah, well maybe 5 years down the road, things are going to be taken care of. You don't know. And during that meantime, in that meantime, you're going to be paying interest. Well, guess what? The interest rate has been increasing on credit card debt. I'm going to show you the chart in a second here. But you have this 3 years of people not paying it, and now suddenly things are going to reverse. It was one of the very unusual circumstances where in 2020, that credit card debt was actually declining. We never saw that before. Why? Because people were staying home. They're locked down. They're not doing what they did before. They couldn't. They're not booking trips that they couldn't afford, all these different things. So they were just staying in their house. And so they were spending a lot less money. And so that actually impacted credit card debt. But at the same time, they were, with this student loan, they didn't have to pay that rent and mortgage. They didn't have to pay that either. So there was a chance to stimulate the economy afterward. But now we're starting to see what happens when you run on fumes. What the dollar store's stumbles say about the economy. Their performance validates the notion that the economic pain coming out of the 2020 situation is concentrated among low-income households. Certainly that is the case, and you see it today. However, I have another article that I was reading, which basically says that, look, even the higher net worth people are going to the dollar store to shop. There's different reasons for that, of course. But I just wanted to show you that, yes, in fact, this is true. The lower income households are always going to take the hit. And by the way, it's really the bottom 80% of people that are hurting the most. Then you go up and you see the difference there. But when we look at this, what are we feeling? Higher interest rates, higher inflation rates, and nothing is being done about it. Home prices are basically, depending on your area, are basically where they were before they started to hike interest rates. And this hasn't spooked anybody. It has to create some sort of cataclysmic event in order for the people to say, all right, I'm going to back off. Okay, I'm not going to do what I did before. But look at Nvidia's stock. Look at all these other stocks that people are just throwing their money into, not really knowing, because they are speculating, and it's paid off. Absolutely right now, right? This is the real average weekly earnings, just showing you that, like, for the last 2 years, when you factor in inflation, people's real average weekly earnings has been in the negative. Inflation robs us each and every day, and certainly if we are not multiplying the amount of money we have, then we are in big trouble. Okay, it's just going to get worse and worse and worse. It's going to pile on. At the same time, you could see the data showing us that the savings rate has declined to levels we haven't seen since the financial crisis, and just a little bit more. It seems to be going in that direction. A little bit more, and we're going way off the chart here. The chart goes all the way back to 2007. What's happening here, of course, is for many different reasons. People don't want to save money. They want to invest their money, because they're not getting, any return on, you put it in a bank, maybe you're only going to get 0.5% at the most. So I can understand why people are doing this. But you could see that at the same time, people don't have the money to spend. Credit card usage, buy now, pay later. Have you heard of that? Do you know anybody that uses those buy now, pay later for silly things, for things they don't need? I've seen examples of this. Okay, I've seen the examples before of people buying food, but not like, they need oatmeal, they need like basics, bread for home or whatever. We're talking about fast food, and they've been buying that with buy now, pay later. Now that is crazy. That's crazy in my opinion, okay? Because the priorities are just so off. You can go buy a big bag of oatmeal, all right, a couple bucks, and you could be eating for days and days. So when I see that, that is a wrong mentality. Okay, there's something not right about that. When you're in those situations, you got to go right down to the absolute basics. You don't buy any clothes. You don't go out anywhere. That's not free. You walk. You ride your bike. If you have to, you take public transit. You sell anything that you don't need, and you start to work every waking hour because you've got to get out of the problems that you've had. I'm going to talk further about this at the end of the video and what you can do. But anyway, stick with me right here. You can see revolving credit monthly change. People are spending more on their credit cards. I think that is obvious and pretty clear. Credit card interest rates have increased beyond 20%. That's the average, depends on your circumstances, and depends on the card too. A lot of the store credit cards go even above 30% from what I understand. So here it is. Workers in America around the world are reportedly significantly higher levels of financial hardship compared to last year. So you could see this. You've been dealing with this all along with an ongoing economic uncertainty. We see global workforce that wants more pay and more meaning from their work. So they're in this situation, and there's no question that people today are starting to basically either go living with their family. Maybe they had moved out, they can't afford it, they're going to live with their family, or the parents are moving in with the kids. In some sort of way, a lot has changed over the past couple of years, and I'm seeing more people living in a single household. That's what the data shows, and also the anecdotal evidence that I've seen. It's not bad. It's not necessarily a bad thing, but I think it is if they don't want to be living together, but they have to. You understand? I think that's the way it goes. Some cultures, of course, it's normal to be living together for forever, but it depends on the circumstances. Now let's talk about Europe really quick. I want to show you this. Bank poised to hike interest rates as inflation remains unchanged at 8.7%, talking about the Bank of England. And certainly the prices have been rising and not looking so good. This is the chart that corresponds. You can see the UK CPI, EU harmonized year over year. That's not seasonally adjusted. Anyway, that's a mouthful. But you could look at the red line. That's the one. And the blue is when you exclude energy, food, alcohol, and tobacco year over year, 7.1%. That has continued to go up and up and up. It's not stopping. They said it was going to stop. So that means they have to continue to increase interest rates in the UK. My friends in the UK, you are getting smacked up left, right, and center. Is food inflation higher in Europe than in the UK? They just give you some prices just to give you a little bit of a look at that. Food prices were rising faster in the UK. I just found this to be, when you compare them, UK, Sweden, Germany, Portugal, it doesn't matter. I just look at it like, okay, the prices are too high in too many different places. It's really hurting people. UK being one of the worst circumstances for Europe, just positioned very badly right now, and they're taking that hit. Let me tell you, okay? You've got to get out of debt. This is the number one priority for you. If you were in this bad debt, if you got credit card debt, buy now, pay later, all of that, I got tips for you. I got 10 tips for you right here. Click this video, and I'll see you there.